Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. Our website www.stochastic-market.com, www.24elliotweight.com, www.dayprotraders.com. The title of this video is how to achieve a consistently winning trade part 3. Alright, we are looking at Apple stock on a daily chart. Alright, myself, I prefer the 2-day chart instead of the daily chart because of many distortions that appear on a daily chart. Okay, so but for the purpose of this video, I'll use the daily chart. Okay, so how to achieve a consistently winning trade, part 3. Okay, I want to talk about the best place to buy and sell on the edge when one is day trading or swing trading. Okay, so we have a horizontal line, so I assume that you have already watched part 1 and part 2 and understand what I've said before. So I'm going to go very swiftly to avoid that the video is too long. Okay, these are short videos, okay, to focus on a specific point. For the rising channel, we know that a high and a higher low, and we select one point at the top to draw a line. So a high and a higher low, we draw a line, first line, and we select one point at the top right here to draw another line that is parallel to the first line. Okay, so because it's a rising channel, we are giving priority to bullish signal. The best place to buy is on the edge of the rising channel. So for the rising channel, okay, the best place to buy is on the edge of, this red line here, the lower part of the channel, okay. For the declining channel, okay, the best place to buy, okay, is the top of the declining channel, the top of the declining channel, okay. So when we are trading, we do not want to violate the market pattern. We are not trading the technical indicators, we are trading the price. We are applying the top-down trading method, okay, and we are checking economy news and the fundamentals. This is the best approach, okay. If we have, horizontal channel, all right, we will look for opportunity to sell at the top of the consolidation. So best place to sell when we have a balanced market pattern or a consolidation. So at the top of the consolidation zone, that's the best place to sell. And because the price is oscillating between two levels, we can also buy at the lower part of the consolidation. Once again, each time that the price is retesting either the upper side or the lower part, we will use a multiple time frame trading method, minimum at least 2 time frames, okay, and we will, okay, check the economy news and the fundamental to make excellent decisions, okay. The market environment is very important, okay. So the best place to buy, if we have a rising channel, it's on the edge of the lower part of the channel. If the price is in the declining channel, the best place to sell is the upper side of the declining channel. The price oscillating between two levels, we can sell on the upper side of the channel and buy at the lower part of the channel. In each situation, we will apply a top-down trading method each time. All right, you see here, so we have a rising channel, so price a low and a higher low, okay. All right, we have the channel ready now. We are waiting for the price to retest the best place, which is the red line here. So you see here, it came back to retest, okay. Retest it here. What do we need to do? We draw a line to verify whether this is a support level, because we want to buy. We want to make sure it's a support level. You see, it's a key level. It's not a bad place. Okay, great stuff. Great stuff. Okay, all right. Now, another thing you need to check, my friend, before you start placing trade or using the top-down trading method, you see, because the price came down, isn't it? You see here, it came down like this, okay? Just draw a common center. You see here, along the price, this is the edge. This is the by common center line. So, this is a little bit tricky, yes or no, okay? This is my common set trend line as the price was pulling back here. I want that trend line to be broken if I want to buy. If I'm buying here, which is the best place to buy, I know that the common set trend line is a little bit up somewhere here, okay? So you see that as the price started going up from here, he hit the common set trend line and couldn't find a support. And in fact, it gapped down. It gapped down. So all I would say to traders, though this is the best place to buy, when we buy, pay attention. So you see it goes down, draw the common center line, and you are buying here, you use the top-down trading method, you switch your entry time frame, your signal time frame, and you have a signal. Okay, great stuff. Enter the trend, price going up. Be aware of the common center line here. Okay, be aware of it. You see, because I'm on a daily chart, this is what has happened on a daily chart. Okay. I switch, for instance, to hourly chart, 30-minute chart, or 50-minute chart, you will see that, okay, the price will came out of a rising channel and start going down. You see a gap down. Probably economy news or market environment, something like that, and it gap down. There's a reason why it gap down, okay? But in order to control the trade, because we are in charge of the trade, whether we are using TSCW24, SY008, or the best trading system in the whole world, the trader is always in charge of the trade. So we know that there is a resistance here. In fact, we can draw another smaller channel here. Don't be afraid to draw it, okay? There's a smaller channel. So there was a smaller bearish channel that brought the price to the edge, the best place to buy for us, okay? So this channel here is a contra trend so far because we are in a rising channel. A smaller channel like this is a contra move, okay? Price pulling back on low volume. But as the price going up, you see that it was stuck in that smaller channel. That smaller channel suppressed the price all the way up here. The only time it came out is behind, okay, the best place to buy. You see here? So use this kind of draw your line each time on every time frame, even on the 5-minute chart. Do that. And you will see that you start, okay, making better decisions, and also you will know where are the resistances so you can control the risk. Finally, the price gap up again from the edge. It's a messy place, you see. There was a gap, the same place, the same zone where there was a gap, the same point. See this level here, okay. Trader use, if you see the price gap up like this, I want you to understand this, okay. Anytime you see a gap, you see the gap, okay, you draw the median line of the gap. So the gap, the median line of the gap is somewhere in the middle there. Trader will try to buy there also. I'm just pointing that out for you. So it was a bit messy here. So trader may end up losing, or some may control it perfectly and manage it. It's like driving to a muddy place, okay, a muddy market. So what's slippery a little bit here, it happens sometimes, and that's why it's so important for traders to know how to manage it in order to achieve consistent winning trade. So in order to achieve consistent winning trade, one must buy at the best place and sell at the best place. At the same time, one must know how to manage the trade. So all I have been saying so far is the management of the trade, and by drawing all these channels, those lines, we can manage the trade. We don't ignore them. We know where they are, and we are aware of them. We are day trading, we are swing trading, we know where they are, so we can manage the risk. So if you gap down like this, you didn't draw your line, you may wonder, what has happened? And then you try to, okay, check it carefully and see, okay, all right, this channel is quite a devilish channel, all right, if you allow me to use that word, okay, and this is why we have all this problem. Maybe you did not check the economy news, okay, check the economy news, what has happened. So we see a gap like this, you want to check quickly economy news, what created this gap, okay, why the market decided to sell Apple on that day, okay. So the first place to buy, which is the best place, was a bit messy, okay, let's move on. So now we have a new smaller channel here. We want the price to break above that channel at least, okay, but instead it was not an orderly breakout, but the price gap up. How do we handle this messy situation here, okay? You see, just gap up like this, okay? myself, okay, you see, because the price came out of our primary channel, the first channel that we have drawn, I will be patient that until it go back inside before I become again bullish. All right? You don't want to chase it like this. Let other trader push it back inside the normal channel where it rises like this. Here is this, you see. I will wait. There are other things we can do. We can project the smaller channel again, blah, 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 blah. It came out of the smaller orange channel. So we project the equal side of the channel. And we can do all this. But I don't want to teach you the most complicated way of trading. So that's why I don't want to highlight it. But we can do that. So the smaller orange channel, probably gap up, we project that channel. See, on the edge. Now again, but there's another resistance straight away ahead of us. The same situation we have here. We were buying here on the edge, and there is a resistance ahead of us, which is the top of the smaller channel. So anytime we want to buy, in order to achieve consistent winning trend, we must check whether there is a room for the price to move up. We want to sell, we want to check whether there is a room for the price to move down. Sometimes, though the setup is at the right place, okay, the price couldn't break the nearest resistance, which is at the top of the smaller channel here. Again, if you decided to buy here, the next target is the red line. So not much room for day traders. Okay, we can play it, take some pips, okay, gently, okay, and see what's happened. But as you can see, even if you look at the candlestick bar, they are quite small. Something is going on. The volatility is quite low, and we don't see tall candle. So in that scenario, myself, I'll be very patient. So you see here, it pulled back here. But you can see that it came on the edge of the channel. This is not a best place to buy. We can't buy here because it was coming from below to the edge of it. We can't buy here. Okay, we can't buy here now. Okay, we can't buy because it's here now. We can't buy because it's coming from below. Okay, it must come from above to retest it. Okay, but now it's coming from below, touching the red line. We can't buy here. Okay, so now what has happened, the price rally a little bit inside the channel, okay, and then pull back. And pull back, okay. So finally, after all this bearish move, the price finally managed to come out clean and retesting. This is a bullish trade setup. This is the best place to buy again. You see? So now the price came back again to retest it here. Always look on your left hand side. So it came back to retest it here again, okay? Let's play it, okay? We draw again, don't forget, just draw your line. Okay, so what I'm doing here is to control this point, you see, before it touches here. So once again, am I talking to myself? Let's zoom into it. The candlestick bar quite small. So here we are. This is my common sector line that brought the price to the edge. So we bought it here. It went up. Okay. Right here we bought it. Okay. It went up, but as it came near, you remember, the first target is the median line of our channel. Okay. All right. So we buy here. It's going up. Our minimum target is near the median line of the channel. We secure again. So I'm just repeating myself. I'll send today to part 2 or part 1 to check what we have said already. We don't want the video to be too long, so I will just skip that, okay? All right? So if we are buying here, okay, our first target is near the median line or the common sector line. See here how it came down, blah, blah, blah. Secure your gain or even take profit. Here, take profit. But it managed to go above it, pull back again. You can see that when the price came back to retest this point, look at the high here, this high compared to this high, compared to this high, compared to this one. No big difference as such, okay? No big difference as such, okay? We want the price to display a new higher high before retesting the lower part of the channel. Now here we did not see a significant high, okay? A clear-cut new higher high before the price was retesting this point. This is a tricky bullish trade setup. Though it worked nicely up, we should know that it's a tricky bullish trade setup so we can control the risk. So the price going up, we are watching this line here. If if you don't know where are the resistance level when you are buying, you can get into trouble. Sometimes traders may buy very close to the resistance level. As they are not aware of the resistance level, the bullish trade setup will fail. Okay? All right? We want to apply a top-down trading method at the best place where one can buy, at the best place where one can sell. When we are buying, we want to know where are the resistance level, the first and the resistance level, draw our trade line. This will allow us to manage the trade and achieve a consistent winning trade, consistently winning trade, okay? So here again, the price pulled back again to retest this point. It was a higher high, finally it's a higher high. You see price ran fast, some people sold it, ran fast before they sold it down. We will apply again a top-down trading method. Our target, minimum target, you enter the trade, you want to know where to come out. It's the median line of the rising channel. Okay, I don't want to draw it again. See, when near the median line, and some traders took profit because people are getting a little bit upset because the price is not going too far. So this time as it bought it here, you see some people push it fast, and they took their profit, price pushed back down. Recovered, but couldn't go above it because everybody now do not believe in this bullish momentum anymore because of this, okay, resistance here. You see the blue line here. Okay, if I color it now into pink, all right, you see here. Now, price came back to retest it here. Best place to buy, but the price did not display a new higher high. Best place to buy, but the price did not display a new higher high at all. In fact, as again, once again, try again your common set trend line. You see now, so you are buying here, it's quite close. So we have the first line that I draw, which is the pink one. It's not properly, it's not, it's just in fact the purple, that one. Okay. Okay. All right. So you see the pink line also is the resistance there. And we have another resistance coming down, the blue line, the blue one here. Let's color that one into green. Are you with me? Okay. All right. So you see the pink line and also the green line here. So here we are stuck here. You see below this. See how it's a kind of triangle. I will not take this one at all. I will not, because though it's the best place to buy, you see how the price was coming down before retesting it. I will not take it here. I will prefer the price to go above the green line before I will buy it. I will not take this one. Though the price is on the edge, I will not even try to buy at all, because this is what I call a useless trade setup. Okay, it's a useless trade setup, and I will end up losing without getting anything because there are too many resistance ahead of me. It's the best place to buy though, but it's a useless trade setup. I will just ignore it. Sometimes you do that. Sometimes traders get into trouble because they trade the same financial instrument every day. It's like some traders trade only the Nasdaq 100 index every day. Some traders trade, for instance, the Dow Jones index every day. And every day, traders think that they should trade. Some days, you don't have to trade. Some days, you don't have to trade. You can just laugh loudly and go and do fishing or something else, okay? Because you don't want to lose, okay? Okay, in the market, there is no coward, okay? The cowards, sometimes they win because sometimes you just look at you, laugh loudly, and just go away and do something else, okay? So, professionals do it. If they know that the market is not going anywhere, they stay away. So here it is, you see. It's a mess. It's not a good place. You see, coming down a low, this is a high, a lower high, and before you're retesting like this, I will not buy here. I will decide to buy above the trend line, break above and retest. Here it ran fast, okay? It ran fast. Okay, it just pull out and it start going up, okay? All right. So very often, as I continue with this discussion, the reason why sometimes the price run very fast, if the price form a double bottom pattern, it usually runs very fast without pulling back. Okay, there's a kind of a double bottom here. See, but this is not a proper double bottom. But sometimes traders do that. You see, you see this line here. Too many lines. Okay, that's what allow you to focus more. Use turquoise. Okay. All right. So you see this turquoise trend line. Okay. So was a resistance at the beginning. The price okay, went above it here. Went above it, retest it, and then went up back again to retest the sell level. Okay. So traders bought it here because they are aware of this trend line. So it pulled back to retest it here. They bought it. It went blah, 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 pulled back again to retest the same trend line, the turquoise trend line. Though it was a tricky place, trader bought it and they push it up, okay? And it just go away, all right? As the price going up, you see we are in a rising channel and the price going up, we want to buy, okay? It's not easy, this one. It went fast, okay? You have to switch to a lower time frame, 10-minute chart, 5-minute chart, to follow the speed of the trend. It's quite fast here. Okay, there's no proper pullback. If you don't want to trade it, okay, you can be patient and wait for it to pull back again here. The best place to buy again. Display high. Here is this. A pullback. Okay. Okay. Pull back. Trader will check the volume. But here, I don't want to go deeper. It's a pullback to retest this. Okay, this is a bullish trade setup. No question about it. We use a top-down trading method, and we will enter the trade and manage the trade. As the price going up, from the edge of, you see, it dropped down, you see. Not from below, from up, drop down. We are displaying new high, pull back, okay? All right. So this is a bullish trade setup. We apply top-down trading method, break it down from the daily chart, use different time frame for the signal, different time frame for the entry, check the economy news, and game on. You can use this for day trading. TSTW24 trader will switch to the first best time frame, looking for signal. On every time frame, draw your channel, draw your trend line, draw the resistance level as I'm doing here, and this will allow you to take the best signal and filter out useless signals, okay? So we enter here, so signal good, the risk is low. Okay, we decide to enter. Our first target is the median line of the rising channel. Boom, 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 you see. Secure your gain or take profit. Move your stop loss to break even at least. And price final resistance on the edge of the median line. If it couldn't go to the top. Sometimes traders assume that as it goes here, they ignore it, and they think that it's going to go definitely there. It does not have to. And now we come back to the starting point, and a winning trade can be a losing trade, okay? So now, this trade, we need to control it carefully. As you can see, a swing trader, a day trader, I should control it, okay? So as a day trader, if you see that this start going up like this, so if you didn't enter here, which is the best place to buy, okay, if it's very close to the median line, ignore it. Don't try to enter very close. Allow it to go above. You see here how he did it here? He went above, sit on it for a while, confirming the support level here. Okay, so you want to know where to enter the trade, the best place to buy, the best place to sell. So here the best place to buy in the rising channel is on the edge here. If we miss to enter here, we can buy above the median line. But be careful. If you are doing that near the median line, know that the best place is here, but normally your stop loss will be below here. But because if you are day trader, swing trader, you don't want to risk too much pips, you want to control it carefully and manage it so that if you are entering a trade here, what I recommend to trader, be very defensive, all right, because it can fail badly. So you want to control it. You don't want to use too much stop loss. If it works beautifully. If it didn't work, you lose very small. I need to stress on this. If you are entering the trade on near the median line, don't use too much stop loss, because if it's going to go down, it's going to go down all the way here. Use tiny stop loss, control the risk, all right? If it works beautifully. What do I mean by work beautifully? It means that we use a tiny stop loss, we control it beautifully, and we get a big profit. That's what I meant by work beautifully. We are exposing ourselves a little bit for risk because we are not using adequate, how you say, okay, adequate, okay, stop loss. We are breaking a little bit of the rule. We are not using the correct stop loss, but because we don't want to expose ourselves too much, but suddenly everything works beautifully, and we survive, and we get paid nicely. This is what I meant by it worked beautifully. Gorgeous, all right? So we can buy the best place near the media line, okay, but we want to control near the media line carefully. The low risk entry point is on the edge of the rising channel. Sometime, my friend, you will see other traders will also look for opportunity to sell on the upper side of the rising channel. These are contra trade. These are risky trade. If I say contra trade, just think of risky, okay? So these are contra trade when traders will look for opportunity to sell here. The reason why some traders look for opportunity to sell here, consider this as a bearish trade setup, though it's a rising channel, is because bullish traders that are buying on the lower part of the channel are willing to take profit here on the edge of the rising channel. But nothing guaranteed that, because the hedge fund and the big institution sometimes do not close their trade in one go. They secure gain. So price move up here, they move stop loss here, price start going up, they let it run. Those kind of traders can force the price above the edge. All right? They don't close it. If everybody was closing a trade here on the upper side, they probably come back down again. All right? So the price will not break out of the channel. But traders don't do that. They secure gain. Not all traders close their trade when they reach a resistance level. They secure their gain. They are still in the market. They just secure 60% of their profit or something like that, and they stay in the market. And this type of trader can force traders that are taking a contra trade to lose. All right. So some traders will try to sell on the edge here. Here you see it went beautifully, so went up because trader went surprised that what's going on with Apple, and finally went up to here. Everybody took profits. Okay. Now as it pulled back here, they want to buy again. Now they start believing that it can go up more. So now they push it above this level. So when one is selling on the edge like this of a rising channel, it's a tricky trade. And what I meant by tricky trade is a risky trade. Again, one will apply top-down trading methods, check the economy news, and know that this is a contra trend, which means you are doing something that you're not supposed to do. The market is rising, but you want to sell. All right? Sometimes you see here it works. Okay? So I don't recommend that to trade it very much, except if you are trading patterns. Sometimes a pattern will be completed, or like for instance, a Fibonacci pattern may be completed, or area wave pattern may be completed on the edge of a rising channel. That become a convergence signal. Okay? Or we are counting area wave, and the area wave has been on the edge of a channel. But to avoid, so suppose you want to sell here on the edge, or you were here. Okay? So here you see that it didn't stop, it went up. Okay, so here it is, so you see it. Okay, come there. How do you do that? Okay, you draw again on the edge of the trend line. I keep saying this 100 times because I know that trader can forget that easily. That's why I'm saying it 100 times. You draw your warning line there. Okay, I'm running out of option now. Let's use red again, the red horizontal line. Okay, you draw your warning line, change it to orange. I use orange for my warning line. Okay, I draw my warning line there. Okay, all right. So I say, okay, this is a contra trend, a tricky bearish trade setup. So I can put a question mark on it. Will it work or will it not work? So two scenarios. It can break above it, which it did here. Break above, retest. Okay, but now you see here. Suppose you want to sell a contra trade. So you will see this on a daily chart. You say, okay, this is a tricky or a risky contra trend. Okay, trade setup. All right. You know that you can't bet on it, but you are waiting. If it starts getting down, you can sell also from the daily chart or for any higher time frame. If you see that, it's not only daily chart. Switch to another signal time frame. And then you go to the entry time frame. Here you will see that there will be no signal there was no signal to sell. Maybe on the 5-minute chart, maybe you sell for few pips, that's different. But for proper sell signal, none. See here, none, okay? Just went up instead. Was a bullish trade setup here, okay? Just went up more, okay? So I do not recommend to traders. So selling on top of a rising channel is not a best place to sell. The best place to sell is in a declining channel on the edge of the upper part of the declining channel, on the upper part of the declining channel. That's the best place to sell. If the price for the declining channel, I want to continue with this discussion. It's a bit long now. Let's continue and finish it off. So you can see here, in this case, what are we looking for? A high, a lower high, and price might display a lower low compared to the previous low. This is the condition here. This is the condition to sell in a declining channel. And you want to know it, and then you want to learn to apply it, okay? So you can see that this low here is lower than this low, okay? This is the previous low, it's a lower low. So the condition for selling in a declining channel, a high, a lower high. We draw the line. We choose one point here to draw another line that's parallel to the first line. Now the price might display a new lower low before retesting the lower part of the channel. But this is not a signal to sell. This is a trading setup, a bearish trading setup. If the price did not display a lower low, but display instead a double bottom pattern, be careful. You want it to display lower low. It doesn't mean that when it displays lower low, definitely the price will come down here. That's why, to avoid nasty surprises, all right, we use a top-down trading method. So from the setup time frame, either daily chart you see this, or 4-hour chart you see this, or weekly chart you see this setup. Now you break it down. Signal time frame, entry time frame, GSCW24 traders, second time frame, first best time frame. That's it. All right. It makes sense? So this is the best place to sell in a declining channel. In a horizontal channel, the best place to sell is on the upper side of the channel. You are doing this, you will achieve consistent winning trade. The reason why you can achieve consistent winning trade, first, you are not violating the market pattern, you are not fighting the market, you are flowing with the market. The second reason why you will achieve consistent winning trade, you are buying at a support level and you know where is the first and near resistance level. You understand that if you are buying at a support level and there is a resistance very close to the support level, the price has not enough room to go up. So you can control it and manage it, as I explained to you. It's like driving in a muddy road, all right? You also check the economy news, okay? You are not using the technical analysis alone. You are trading forex. You are checking the economy news relating to the financial instrument that you are trading, okay? And you know also how to sell. You use a top-down trading method, the setup, the signal, and a low-risk entry point. If the risk is too high, you just laugh loudly and let other traders trade it, and you save your money in your bank, okay? So this is how one can achieve consistent winning trade, okay? Knowing exactly where is the best place to buy, where is the best place to sell, what is the minimum target if one is buying in a rising channel, the minimum target to buy in a rising channel. The first target is the median line of the rising channel. The price does not have to reach the target. If you are satisfied with the profit, you can take profit. In order to achieve consistent winning trade, one is managing the trade, okay? So you don't just enter the trade and hope, okay? So you enter a trade is, some traders close their trade, suppose they are using 50 pip, okay? Some traders are so disciplined. I wish I was like that myself. So they enter the trade, they have 50 pip stop loss. If the trend went against them, it take 50% of their stop loss, there are traders that will close that trade straight away because they have lost 50% of their stop loss. They will close that trade. I don't trade like that. I move my stop loss sometime. Okay? So some trader will do that. Okay? So managing the trade is at the center of achieving consistent winning trade, apart from everything that I've shown you today. So as you can see here, the first best place to sell was here. But as you can see, if we don't manage this trade here, we'll end up losing. Though we are buying at a support level, because we are on the edge of a trend line, we draw the only line, which is a key level, it's a support level. But as the price went up a bit, if we don't handle it here, we can end up losing big time. All right? The same thing, if you want to understand where are the risky trade, this is a contra trend, which is a risky trade. So in this case, we want to control it carefully in order to have a profitable trade or a winning trade. All right? We can buy, the best place to buy in a rising channel is on the lower part of the channel, but we can also buy above the median line. If we are buying near the median line, we become very, very defensive because we are a little bit exposed. Okay, but we are taking a calculated risk. Traders should remember that. Okay, the same thing. If you want to sell, the best place to sell is in the upper side of the declining channel. But if we miss that, and we are so desperate to enter the trade near the median line, okay, so the second place to sell is near the median line of the declining channel, below it. So you want it to. How do you sell it? Okay. Myself, I'll prefer, if you want to sell, so that you may see like this, you see. So one candle closed below the median line, if you're on the daily chart, and another smaller candle came up a bit to touch it like this. So break below and retest with two candles. One candle breaking below, one candle retesting it. Can be messy. As you can see here, around the median line can be messy. You see here how he did it, blah, 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 blah. Okay, so sometimes trader can lose before re-entering the trade again. Near the median line can be messy sometimes. You see here again, a little bit messy. Most of the time, it's a little bit messy. I prefer to enter here. Sometimes you see how it came here and change that so you let it, hit it and start going up fast before you join them. Okay, but it can be messy most of the time near the median line. The best place is the lower part of the channel, of a rising channel, or selling on the upper side of the declining channel. For the horizontal channel, traders think that it's very easy. Yes, it is easy, but here again, one must control the risk because everybody knows what is likely to happen, and some traders can be a little bit careless, and the price will go sometime above the level, up. Okay, so you enter here, price goes back up before coming back down. Okay, so important in each case to use a top-down trading method. This is the end of this video about how to achieve consistently winning trade, part 3. We're talking about the best place to buy, best place to sell, managing the risk, using a top-down trading method, okay, checking economy news and the fundamental, analyzing the risk, and controlling the risk like a professional traders. Thank you for watching, and we will speak to you very soon. If you like this video, my friend, give us the thumbs up. If you dislike it, please give us the thumbs down. But put a comment below to tell us what we need to improve on. Okay, this will help us to improve our recording. If you're in love with this video, all right, great stuff. Share it on Google+, on Twitter, on Facebook. Even you can embed it. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders talking about how to achieve consistently winning trade, part 3. See you in the next video when we'll be talking about how to achieve consistently winning trade, part 4. Speak to you soon.